Whiteoak Capital Flexi Cap Fund NFO. What kind of value addition this particular fund is going to bring to your portfolio? Will this NFO help you achieve your financial goals, or will this NFO is going to hurt your wealth creation process? Let us evaluate. Before reviewing this particular fund, we have to understand the key features. Hi, this is Ramalingam from holisticinvestment.in. We help individual investors like you to take a right financial and investment decision. Who is Whiteoak Capital Mutual Fund? You must be knowing about Yes Bank Mutual Fund. Yes Bank had a mutual fund. When Yes Bank went into trouble, it was acquired by Whiteoak Capital. Whiteoak Capital so far has got a couple of debt funds. They are not having any equity funds. So Whiteoak Capital Flexi Cap Fund NFO is the first equity fund launch from Whiteoak Capital. This particular NFO is open till May 2nd. The investment objective of this particular fund is to generate capital appreciation by dynamically investing in a mix of equities across market capitalization. They can invest in large, mid and small cap stocks. The minimum investment is just 500 rupees and there is no entry load, and an exit load is 1% if you are withdrawing before 1 month. The benchmark of this particular NFO, Whiteoak Capital Flexi Cap Fund, is S&P BSE 500 is the benchmark. So BSE 500, as we all know, it has got large cap, mid cap and small cap in this particular index. So what is a Flexi Cap Fund? In a Flexi Cap Fund, the fund manager is not having any restriction to invest in one particular capitalization. He can choose to invest in large cap, mid cap, as well as in small cap. And there is no limitation for him to maintain only this much exposure in large cap, this much exposure in small cap. There is no restriction. If he thinks large cap will do well and his outlook for large cap is bright, then he can go overboard on large cap. If he thinks like small cap will do well, he can go overboard on small cap. So how much percentage exposure they should have in each and every capitalization, there is no restriction. Such restriction is available in a multi-cap fund. Whereas in a flexi cap fund, it is completely dynamic. The fund manager, based on his outlook, he can decide what kind of exposure to have. This fund is not having any entry load, and this fund will be managed by Ramesh Mantri. What is the investment strategy of this particular fund? This fund will invest across capitalization, large, mid and small. This fund's strategy is to generate alpha, means to beat the index and generate additional return than the index through right allocation in what kind of sector, in what kind of stocks to allocate. So right kind of allocation, weightage, how much weightage to be given for this particular sector, how much weightage to be given for this particular stock in the overall portfolio. So right allocation and the right selection, picking the right stocks, right? Stock selection as well as the allocation. Based on these two parameters, they are trying to generate alpha. Because this fund can invest across market capitalization, this brings a lot of flexibility to the portfolio. Based on the market outlook, the fund manager will be able to take momentum calls if needed. And he can also choose to change the weightage dynamically. From large cap, he can go overboard, he can move there to mid cap, from there to small cap. Whatever the allocation he wants to give, he will be able to do it. Weightage can be changed by the fund manager anytime based on the outlook. I think by and large, we are able to understand the investment strategy of Whiteoak Capital Flexi Cap Fund. Now is the time to understand the potential merits of this particular fund. Now, before investing in a fund, we have to understand what are the potential merits and potential demerits, reward and risk. So what kind of reward this fund has in store for you? Being an equity fund, that to a flexi cap fund, this fund has got a potential to give you long-term capital growth. The short term, this fund can be volatile, but in the long run, long term, what is long term? 7 years plus can be considered as a long term for equity mutual funds. Better diversification is possible because this fund can invest across market capitalization and it is a diversified fund. They don't restrict themselves to a particular sector or a theme. They will invest across multiple sectors and multiple themes across capitalization. So a better healthy diversification is possible through this flexi cap fund. This fund can take advantage of the changing market cycles, right? If the market cycle moves from large cap to small cap, say if large cap becomes out of favor and a small cap is going to become favor, or large cap is overvalued, small cap is undervalued, then based on this cyclical nature, they can take advantage capitalization. Similarly, sectoral cycle changes, right? From consumer goods, he can move to IT. From IT, he can move to pharma. Based on the change in the outlook and change in the cycle, he will be able to take a call. Similarly, like during recession, he can change the stocks into defensive stocks. During recovery and boom, he can change the stocks into momentum stocks. These kind of changes he will be able to do in the portfolio. Being an equity fund, that too a flexi cap fund, this fund has got potential to deliver inflation beating returns. The risk adjusted return can be better in this fund in the long run. So these are all the potential merits of this particular fund. Now, can we look at what can be the potential demerits? What are all the risks involved in this particular fund? Let us analyze. Being an equity fund, this fund is not for short-term investments. If you are a short-term investor or you have got only short-term money to invest, then definitely you have to avoid this fund. Only if you have 7 years plus, you can choose this fund, because stock market will go through a period of negative return. Also, it will have periods like a market where it is not giving you any return, no return, a period of low return, average return, above average return. These kind of 5 phases are there. In what order it is going to come, in what stretch it is going to come, we don't know. That is why we say when you are investing in an equity fund, you have to stay invested for long term, like 7 years plus. So if you have got only short term money, you have to strictly avoid this fund. This fund can be very riskier in the short term. This fund can give you negative returns in the short run. So avoid this fund for short term money. Being an NFO, it is not suitable for a conservative investor, because at times this fund can also have higher exposure to small cap. So that way, this fund is not suitable for a first time investor or a conservative investor. It is not suitable. Then this fund is not at all having a track record, because it is an NFO. We don't have any track record. If it is an existing fund, there will be a track record for this particular fund. So we can analyze how this fund has performed vis-a-vis index, how this fund has performed vis-a-vis other flexi cap funds, how this fund has managed the market crash, market correction, recovery, recession. Everything we will be able to analyze, and then we will be able to take a call. Because there is no track record, it is difficult for us to judge the performance, the ability of the fund manager. It is difficult for us to judge. Not having a track record is one thing, and not even having a portfolio. This fund, what kind of portfolio it is going to build, we have to wait and see whether they are going to invest in value stocks, whether they are going to invest in growth stocks, they are going to choose stocks based on top-down approach or bottom-up approach. All those things we have to wait and see. There is no clarity here, right? So here we are not able to take any type of calculated risk. No, we are simply taking blind risk here. So there are existing flexi cap funds with proven track record. We can choose those kind of funds. There's a myth that okay, NFO is available for 10 rupees and existing funds are costlier with 15 rupees, 20 rupees kind of NAV. It is not that way. It is simply a misconception. NAV of 10 or NAV of 20 is going to generate returns only based on the underlying portfolio. So without knowing the portfolio, investing in an NFO is like completely taking a blind risk. So we have in detail analyzed the risks involved in this particular fund, potential demerits we have analyzed. Now, what is the final takeaway? Is this fund good or bad? Do we have to invest in this fund or we have to avoid this fund? It depends on you as an investor. Yes, if you are a conservative investor, then you have to avoid this fund till it builds up a good and stable portfolio with a reasonable track record. So we can wait and watch and then choose to invest in this fund. During NFO, being a conservative investor or a first-time investor, you can avoid. If you are an aggressive investor, you have got spare money to experiment, then you can try this fund with a minimum investment. This is only if you are an aggressive investor and want to just experiment, then try with a minimum investment. If you are a beginner, then if you already have conservative funds in your portfolio, maybe you can go for existing flexi cap funds with a good track record. Instead of this NFO where you are taking blind risk, you can avoid, and you can go for existing flexi cap funds with proven track record you can choose. If you have any questions related to this particular fund or any other investment options, feel free to book a free appointment with our financial planner. The registration link for the free booking is available in the description of this video. Would you like to attend the insightful investment webinars? We are organizing insightful investment webinars for free regularly. The upcoming webinar details are given in the description of this video. Please book your seat by giving your name and email ID in the registration link, which is available in the description of this video. If you are not subscribed to our YouTube channel so far, please subscribe to our YouTube channel now so that you will not miss any of our future videos. Bye.